How do I negotiate homeowners insurance if I am in a flood zone? If you are investing in real estate in a flood zone, you may be wondering how to negotiate homeowners insurance effectively. The process can be tricky, but with the right strategies, you can manage costs and protect your investment. First, it is essential to understand the flood zone designation of your property. Flood zones are categorized by risk, with high-risk zones often labeled as Zone A or Zone E, while lower-risk zones are classified as B, C, or X properties in high-risk zones usually requiring flood insurance, especially if you are using federally backed mortgages. Knowing your property's specific flood zone can help you negotiate better insurance terms. Next, consider including a flood zone contingency in your purchase contract. This clause allows you to cancel the contract or renegotiate terms if the property is in a high-risk flood zone. It also opens the door for discussions about repairs or flood mitigation measures with the seller. For instance, you might negotiate to elevate the foundation or improve drainage systems, which can lower your insurance premiums. Shopping around for insurance is another critical step. You can obtain flood insurance through the National Flood Insurance Program or private insurers. Private companies may offer more flexible policies or competitive rates. By comparing quotes from multiple providers, you gain leverage to negotiate better terms or lower premiums. Flood mitigation efforts can also play a significant role in reducing insurance costs. Insurance companies often provide discounts for properties with approved flood mitigation measures. As an investor, you can negotiate with the seller to implement these measures before closing or plan to invest in them after purchase. Examples include installing flood vents, elevating utilities, or adding barriers. These improvements not only lower premiums but also enhance the property's value. Understanding your policy and coverage limits is vital. Before finalizing your insurance, carefully review the policy details, including coverage limits, deductibles, and exclusions. For example, the National Flood Insurance Program typically caps building coverage at $250,000. If the initial offer does not meet your needs, discuss adjustments with the insurer or consider additional endorsements. After purchasing the property, be prepared to negotiate claims and adjustments. If flood damage occurs, working proactively with insurance adjusters can maximize your claim settlement. Document damages thoroughly and communicate clearly. If necessary, appeal settlement offers or involve public adjusters or legal counsel to ensure fair compensation. Lastly, factor insurance costs into your investment analysis. High flood insurance premiums can impact your property's carrying costs and overall return on investment. Use insurance quotes and potential mitigation costs as negotiation points with sellers to reduce the purchase price or request seller concessions. Negotiating homeowners insurance in a flood zone requires thorough research on flood risk, contractual protections, leveraging mitigation to reduce premiums, and actively managing insurance policies and claims. By following these steps, you can protect your investment and optimize your financial outcomes.